Now, auditing August 2025, question 24. August 2025, question 24 reads, the following balances were extracted from the books of Limao Limited, a medium-sized entity, as at 30th June 2025. So that is a trial balance from land at cost all the way to the discount received of 13,000. Additional information. Inventories as at 30th June 2025 were valued at 56 million. Depreciation and amortization are to be provided on the cost of the asset at the following rates. Building is 2%, fixtures and fitting 10%, then softwares 20%. Land is to be revalued upwards by 5 million as at 30th June 2025. The expected credit loss as at 30th June 2025 was estimated to be 2.4 million. Operating expenses prepaid at the end of the year amounted to 400,000, while unpaid administrative expense amounted to 700,000. The company estimates tax for the year at 9.5 million. Then required the audit schedules showing trial balance before adjustment, trial balance after adjustment, profit or loss items, and the statement of financial position items. That was 20 marks. Now, those who work in audit firms will find this very useful because they prepare a lot of audit working schedule. This is just audit working schedule where you do the trial balance before adjustment, you do the adjustment, trial balance after adjustment, the profit or loss item, then also the statement of financial position item. The solution will be put up here. Solution. Now on solutions, on the solution, you've already prepared the format of the audit working schedule. This is Limao Limited audit working schedule for the year ended 30th June 2025, which is comprised of the original trial balance with debit and credit, adjustments with debit and credit, adjusted trial balance with debit and credit, SOPL items with debit and credit, and SOFP items as well with debit and also credit. So that's what we have for the beginner. Now, once you have that, let us start with the original trial balance. Just use the trial balance the way it is. So equal sign under the details, then click on land at cost, enter, then drag the way it is. So click on the land at cost on the other side, then just drag down the way it is up to the last item, So it's not yet over. Okay, it's up to here, up to discount received, then you can clear that. So it's up to discount received. If it is protruding up to the debit for the trial balance, you just drag some line. Now that is the items the way they are. I've just picked them the way they are. Now, land at cost. Is it a debit item or a credit item? That is a debit item. Land at cost is a debit item, and therefore click on the debit side of land at cost, then click on the item. So 20,000 is a debit item. Now, building at cost is also a debit item, which means you just drag that down. Building at cost is a debit item. Accumulated depreciation is a credit item. So accumulated depreciation, equal sign, and click on the 5,000. So you can see accumulated depreciation is a credit item. Fixtures and fittings, so equal sign. Fixtures and fittings are debit items. So fixtures and fitting is here, 64. Accumulated depreciation for fixtures and fittings, I believe we can also just copy this formula, the one that we have here, because I aligned well. I can just do Control C, and accumulated depreciation here will be Control V. I hope it will pick the correct value. If only you aligned well. If only you aligned well with the other side. Like in my case, you can see that where there is land here is where there is land on the other side. So if you aligned well, they are all on the same line to the other side, then you can copy the formulas. Now inventories are debits. So inventory are debit values. So we have opening inventory of 42. Other operating expenses, this you can scroll down because they are all debit. Admin is debit. Selling is debit. Credit loss is a bad debt written off. That's a debit. Dividend paid, preference shares and ordinary shares are all debit. So debit, dividend paid, and also dividend paid for preference and dividend paid for the other one. Tax paid, that one also looks like a debit. It's a tax paid for the year, 6,500. Retained earnings are credit. So retained earning is going to be credit. This is 29,000. Software license is an intangible asset. That's a debit. So this one here is a debit, the 16,000. Then bank overdraft is a credit. So this is a credit. Bank overdraft is a credit, 2,500. The one that follows is ordinary share. That's a credit item. Preference share is a credit item. Share premium is a credit item. A 6% loan from EC Bank is a credit item. Payable is a credit item. Then expected credit loss, that is allowances for about trade receivable is a debit. Trade receivable is a debit. So this is trade receivable debit. Then expected credit loss, that is allowances for bad and doubtful debts, is a credit. This is how much? 1,800. Sales is a credit. So just drag this formula. Purchases is a debit. Purchase will be equal sign debit. 414. Discount allowed is a debit. Then finally, discount received is a credit of 13,000. This one here is a credit of 13,000. So get the total, though this will keep changing as we move because we are going to have other items here. So the total is going to be alt equal from top. Adjust that formula to pick from top. There, enter. 723, then drag across. It is not tallying. That means there must be some issue somewhere. So that should balance, yet it's not. Profit. So this is not balancing. The debit and credits are not balancing. And looking over this, then the retained earnings were wrongly placed. So retained earnings are amounting to 29,000, not the one that was included. So under retained earnings, it will be equal sign, drag across, and click on 29,000. That is the correct retained earnings, enter. And now this should balance at 723,000 and 723,000. After the original trial balance balances, then we want to move to the adjustments. Adjustments is in the second part here, and just move to the additional information. Number one, inventories as at 30th June 2025 were valued at 56 million. So that is inventory. So just below here, you can include what we refer to as adjustments. Adjustments. You can jump a line and put them here for our adjustments. And we have closing inventory. Closing inventory. Closing inventory. Now closing inventory will be divided into two. We have closing inventory, cost of sale, that will go to the cost of sale. Then we also have closing inventory that will be used as a current asset. So there is closing inventory that is used as a cost of sale, and there's also closing inventory that is used as a current asset. So closing inventory, then the other part will be current asset. Current asset. So what do we have? Closing inventory, cost of sale, and closing inventory, current asset under adjustment, and it amounted to 56 million. So under adjustment, you're going to write 56 million here. So debit side, cost of sale, 56 million. Not debit side, but credit side, the one for the cost of sale. It reduces the cost of sale, which means it will go to the credit side. The one which is a current asset will go to the debit side, so 56 million. Next, depreciation and amortization are to be provided on cost of the asset on the following rates. So we have depreciation and amortization. So start with the depreciation. Depreciation expense. Depreciation expense. I hope I have amortization. Amortization. This is accumulated depreciation. I'm not seeing amortization anywhere. So I'll be creating accumulated depreciation for accumulated amortization, I mean. So start with the depreciation expense. Then depreciation is 2% on building. So I want you to calculate depreciation, 2% on building. So move up. So depreciation expense will be on the debit side. So that is depreciation, unless there is depreciation up here. There is no depreciation up there. So you simply bring depreciation expense equal sign 2% times. So you can put in bracket because there's another one that will be affecting that. So that is 2% times. Is it on cost or cost? So that will be 2% times, go to the original trial balance and find building, click on 80,000, close bracket and enter. So that is depreciation of 1,600, 2% times 80,000. Now apart from this depreciation being here as 1,600 on the debit side of the adjustments, the credit entry goes to accumulated depreciation. So I want you to go to accumulated depreciation. Here it is. On the credit side of adjustments, do equal sign and click on the 1,600. 1,600. Remember, we have here under adjustment, there is 1,600 here. Don't interfere with the original trial balance. So 1,600 on accumulated depreciation. Then we also have the 1,600 under the depreciation expense, debit, credit. Now we also have fixtures and fittings 10%. Now double click here on where you have your depreciation expense plus, so don't interfere with the formula that we have, just add, then bracket 10% times 10% times. Remember it was fixtures and fittings. So look for fixtures and fittings on the original trial balance and click on it. This is 64. Close bracket and enter. So 10% times 64,000, enter. Now the total is 8,000. The total is 8,000. The 1,600 plus 6,400 that we've gotten, and the total is 8,000 for depreciation. Now go to accumulated depreciation of fixtures and. So this one changed, which means initially it was how much? 1,600. So you can recalculate here. So don't use the 8,000 that you have here. It will be equal sign. It was 5% times 80,000 because it was 1,600. So it changed. Was it 5% or
2%?
2%. So it was 2%. So you use 2%. 2%. It is not supposed to change. It was 1,600. So remove the 8,000 that is here and change it to the correct value. So make sure that you change this 16. It is changing because we had added the other 8,000. So adjust that. Same to this. Accumulated depreciation for fixtures, it will be equal sign. Now it was 10%, equal sign, then 10% times, now click on 64,000. We're just recomputing that depreciation, and that is 6,400. Now, the last one is software. So that is for amortization. So pick amortization, 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 amortization and adjustment was said to be 20% on the cost. So 20% on the cost will be equal sign 20% times, what is the cost of software? 16,000. That is 16,000. Enter. So you can see it's 3,200 on the debit side. Do we have accumulated? Accumulated amortization? No. So create accumulated amortization. Accumulated amortization. Accumulated amortization. Credit side, that will be equal sign 20% times, again click on the, no need of that, no need of that, just do equal sign and click on the 3,200 because you already have an answer. So equal sign, click on the 32. The answer is the same. Simply move this down, the total. If you've reached the total here, you just keep moving it down, cut and paste, because we are continuing. Now, the next item is number 3. Land is to be revalued upwards by 5 million. So land moves upward by 5 million. That is revaluation gain. Check if you have revaluation reserve. Revaluation reserve? No. Create a new account for revaluation reserve. Revaluation reserve. Here it is. And it was to move up by 5 million. It's 5 million. You are supposed to credit, not debit. You credit that. You simply credit. We're here with 5 million. The double entry for evaluation goes to land. So move up, where you see land, under adjustment, just write 5 million. So under adjustment, the debit side has 5 million. Then under adjustment on the credit side, the revaluation reserve has 5 million. Revaluation reserve also has 5 million. So that is done. 4. The expected credit loss as at 30th June 2025 was estimated to be 2.4. So that is the expected credit loss, 2.4. That is bad debt written off. Bad debt written off. I believe we have all of them. So move up and find bad debts. The expected credit loss is here. Expected credit loss, and that is going to change by 2.4. So go to the credit loss, and on the debit side, because it's increasing, debit side of adjustments, you can include 2.4 here. 2,400, debit side of adjustments. Under the debit side of adjustments, credit loss will increase by 2.4. Okay, then bad debts affects receivables. So go under receivables. Go under receivables on the credit side of adjustments. Credit side of adjustments and remove the 2.4. Just say 2.4 on the credit side. Report the 2.4. 2.4 under the credit side. Okay, then that is done. Number 5, operating expenses prepaid at the year end amounted to 400, while unpaid admin was 700. So here we have prepaid operating expense. Operating expense. Remember, prepaid operating expense is a current asset. This one is a current asset, the prepaid operating expense. Then we also have outstanding admin, outstanding admin expenses. That one should be a current liability. That one should be a current liability. Outstanding admin expenses. So we have 400 and 700. Prepaid is an asset, so it means it's a current asset. Under adjustments, it will be a debit balance. So prepaid is 400. Then accrued is 700. So that will go to the credit side. This other one is 700. So 400 current asset, 700 current liability. Current asset is on the debit side of the adjusted trial balance. The current liability is on the credit side of the adjusted trial balance. Now adjust this. Prepaid expense, apart from being a current asset, will be deducted from the operating expenses. It's an expense for the next year, so it's deducted. When you take it to the SOPL, you deduct it from the expense it relates to. So go and put this on the credit side of operating expense. So look for operating expense. We have operating expense. Where are they? I hope it is this other operating expense. Other operating expense. Then on the credit side of that, equal sign, take the 400 on the credit side of that. The other one is admin, outstanding admin. Accrued will be added, so put that on the debit side of the adjustments. Debit side of the adjustments. Debit side of the adjustment, because it will be added, so the 700 moves up there. So you can see we have 700 and we have 400. Okay, then number 6, the company estimates tax for the year to be 95. So we have estimated tax. This will be the income tax expense. Income tax expense. Then we also have the current tax. We also have the current tax. Current tax. Now, current tax will be a current liability. Current tax will be a current liability like that. Then the income tax will be an expense. So the amount is, the income tax expense will be 9,500. Then the current tax will also be the same, 9,500. Does that affect the tax paid? I saw tax paid somewhere. I saw tax paid on some part. Can't see it again. you simply do is to drag this across, and you're going to get 75,300, and the other one is not balancing. How can that not? So this one is not balancing because the formula is supposed to be dragged up to down. So you just readjust the formula, then drag again so that it picks everything. It should be 85,200, 85,200, because now the formula is picking everything. The formula is now picking everything. Just adjust the formula to down. Go to the adjusted trial balance here. Now, was land affected? Land. Because for items on the debit side, I'll use the following formula. So we'll begin on that, equal sign. Take land at cost, the one that you have on the original trial balance, plus go to the adjustments and add whatever is on the debit side, and less whatever is on the credit side. So in my case, it will be a what item there? We have S10. That is what you less. Enter. This is the formula that you use for items on the debit side. You start with the original, what is on the original trial balance, add what was on the debit side of the adjustment, and less what is on the credit side of the adjustment, and enter. So this is the formula that I'll be copying for everything on the debit side of the trial balance. Now drag this formula to this because it also affects building at cost. Now for accumulated depreciation, it's an item on the credit side. So here, item on the credit side, equal sign, click on the original trial balance where it is, plus go to the adjustments and add what is on the credit side. Under adjustment, you add what is on the credit side, then less what is on the debit side of the adjustments. That is for the items on the credit side of the trial balance. Enter. Once you've satisfied that, what follows will now just be to copy the formula. Fixtures is on the debit side. So you copy this formula, the one for land or the one for building, Control C and Control V. The other accumulated depreciation is on the credit side. Copy the formula for the other accumulated depreciation as well. Copy this and paste here. That will work. Inventory is on the debit side. Copy the formulas that are on the debit side. So Control C, then here Control V. Now from here we can drag because all these items are on the debit side. Drag from this moving down all the way to tax paid. That can work because all those items are on the debit side. Go to the retained profit, which is on the credit side. Copy this formula for accumulated depreciation. Paste here. Then software is on the debit. Copy this formula that is used on the debit. So Control V. Then all these are on the credit. Use this other formula for items on the credit. Copy and paste here. Then you're going to drag down all the way to trade payable because that formula will work. There's a formula for item on the debit side. Control C and paste here. Then this another one is expected credit loss. Use formulas on the credit side. Which one is this? Okay, here, expected credit loss. Sales, same formula up there. Purchases, we need a formula on the debit side. So Control C and use that for purchases. Discount allowed, same on the debit side. Discount received, you can use a formula on the other side. So received will be here. Okay, just up to that. Just up to that. Now for these others adjustments, you use them the way they are. the ones for adjustments. Are they used again? Because we are on the adjusted trial balance, so which means use them the way they are. Closing inventory, this other one will be just here. This will be here. This other one will be, all these are on the debit. So up to this part. This is on the credit up to this part. Then this is on the debit. This other one is on the credit. And finally, this is on the debit. And this one here is on the credit, like that. Then you can drag across again for the adjusted trial balance. It will balance 805,400. I hope I've not lost you somewhere. I just did one formula. Then that formula is what I was copying on the debit side and also on the credit side. You can see the adjusted trial balance balances at 805,400, 805,400. Now, the statement of profit or loss items. Statement of profit or loss items, and you will help me understand this, that building does not go, land does not go to the statement of profit or loss. Never. Building doesn't, accumulated depreciation doesn't, fixtures and fittings doesn't, accumulated depreciation, inventories do. Opening inventory go to the statement of profit or loss. So that will be equal sign, then click on the 42. That one goes there, opening inventory. Other operating expense, they go. So that is the 12,600. Admin expenses, they go to the SOPL. Selling and distribution go to the statement of profit or loss, their expenses. Credit loss, does it go to the statement of profit or loss? Yes. Dividends paid. Dividends paid, they usually go to the statement of profit or loss. The dividends paid, yeah. Pale kwa, it usually is supposed to be the statement of changes in equity, but we don't have the statement of changes in equity here. So we can take them to the statement of profit or loss on the debit side. So they were paid. Remember, they are not liabilities, so they were paid. That is 800, and the other one is 6,000. Take them there. Tax paid, that one is taken to the SOPL. Retained earnings brought down, that one is not taken to the statement of profit or loss. Or is it? No, it's not. One can argue that dividends will reduce retained earnings, but we usually have the statement of changes in equity. Here we don't have the statement of changes in equity. So just take them to the SOPL. Then retained earnings doesn't, licenses doesn't, bank overdraft doesn't, ordinary share don't, 8 preference shares, the 8% preference shares, I saw some notification, 8% preference shares, a minute, I think, 8% preference shares doesn't, share premium doesn't, 6% doesn't, trade payable doesn't, receivable, expected credit loss, yes, expected credit loss, expected credit loss. Did we have another credit loss? I think expected credit loss is usually compared with at the beginning is compared with at the end, so that you can see whether it's an increase or a decrease. So this one goes here. So this will be equal sign 1800. So the expected credit loss of 1800. Allowances for bad and doubtful debts. Sales, yes, sales goes here. Sales goes. Purchases, yes. Sales will be credited. Purchases will be debited. Discount allowed will be debited. Discount received will be credited. Then let's see the adjustments. Closing inventory cost of sale will be credited. Cost of sale. Current asset will not. Closing inventory current asset will not be placed on the SOPL. Depreciation will be placed on the debit side. Amortization will be placed here. Accumulated amortization will not. Revaluation reserve will not. Now prepaid operating expense current asset, that one is a current asset, will not. Outstanding admin is a current liability, will not. And what else do we have? So accumulated depreciation will not, revaluation will not, prepaid operating will not, outstanding admin will not. Income tax will be placed here. So the income tax will be placed at this level. Then the current tax liability will not. That is all. Across, this should not balance. This one will not balance. The reason is the difference is retained earnings for the year. That is retained earnings for the year as the balancing figure. Retained earnings for the year. Retained earnings for the year. That will be the balancing figure. Now, how do we get retained earnings for the year? They are obtained as follows. You can call it profit for the year, but since you deducted dividends, now it will be retained earnings for the year after deducting dividend. So this is how we get it. Equal sign. Then click on the credit side, the total of the credit side, minus sum tab. So that has disappeared. Equal sign, sum tab. Click on the 550,800 minus. Okay, that is wrong again. I started it wrongly. Here, equal sign, click on 550,800 minus sum, double click on the sum that way. So it is the 550,800 minus summation of, we are summing everything up. So move up and sum from everything up there on the debit side of the SOPL items. Sum just up to up here, just up to here. Don't go past the 9,500. You'll close the bracket and you will enter. So equal sign this 550,800 minus summation of the items that you see up here. That is the formula. W51 is 550,800 minus sum of the items up there. Enter. So it is 17,400. For the statement of financial position, items, here it is. Start with the first item again. Land, yes. We are using adjusted trial balance. So land goes to the debit side. A building goes to the debit side. So that one also goes to the debit side. Accumulated depreciation goes to the credit side. Then we have fixtures. That one goes to the debit side. Accumulated depreciation for fixtures. Accumulated depreciation for fixtures was how much? 6,400. That goes on the credit side. Inventories opening were already used in the SOPL, so they will not go to the other part. So all these are expenses. Leave them, they don't go to the statement of financial position, all this part. Retained profits goes to the credit side. So retained profits of 29,000 brought down. Then software licenses, those are intangible assets. They go to the statement of financial position, the 16,000. From software, we go to bank overdraft. Yes, credit side, the 2,500. Ordinary shares, all these go to the statement of financial position. From 1,000 enter, the 100,000 then drag down to 2,800. That's the trade payable. They all go to the credit side of the statement of financial position. The loan is there, trade payable, receivable goes there. Receivable will be a debit item in the statement of financial position. So sales, no. Expected credit loss, we've already used it. Sales, no. Purchases, no. Discount allowed, not. Discount received, not. Go to the adjustments. Closing inventory cost of sale, no. That one is a cost of sale. But closing inventory current asset, yes. So this is the 56,000 goes under current assets. Depreciation, no. Amortization, not really. But accumulated amortization goes here. We have accumulated amortization of 3,200. Revaluation reserve, this one goes here, of 5,000. We have revaluation reserve, credit side. Prepaid current asset will move here. Prepaid current asset of 400. Outstanding admin will be a liability of 700. So remember, prepaid is a current asset, but outstanding is a current liability in the statement of financial position. Income tax, no, but current tax goes there. So current tax is a current liability of 9,500. Finally, retained earnings for the year, yes, it goes on the credit side. Equal sign 17,400. So this goes on the credit side that way. Now the statement of financial position should balance automatically. If not, we are wrong. So this should just balance automatically, and ours seems not to be doing exactly that. So this is not balancing, and we check through to see why, and we have an error on accumulated depreciation on fixtures and fittings. Fixtures and fittings, it should be equal sign. You go for the adjusted trial balance figure of 32,000. Enter, and I believe now it should return 272,000. So that is the final of the answers. Pick it up from tomorrow. So this is the final answer for Limao Limited audit working schedule for the year 2025 for the period ended 2025. 20 marks.